Hi Mortgage Heroes, Andy Cruz here in Business Development, and this is Monday Mortgage Minute. Welcome back to a new week. This is take 2. Yes, I did this entire video already once, and you know what? The memory card completely failed. So here we go again. Welcome back to a new week, you guys. Thank you so much for giving us an extra day to bring Monday Mortgage Minute to you. Yesterday was President's Day for all those of you that had the day off. Congratulations for all those of you who are working. Thank you so much for showing up. I want to get right to it today. Obviously, you've probably seen the top headline around everything right now seems to be the Russia-Ukraine situation. But I'm going to tell you right up front, that has really nothing to do with the rate environment we're facing. And it's because all the things leading up prior to this situation were the economics and the monetary policy we've been talking about. I've been talking to you about inflation, I've been talking to you about jobs, I've been talking to you about the Fed ad nauseum. And the Russia-Ukraine situation really doesn't change any of that, especially as analysts and investors are looking into the month of March and when the Fed is expected to raise their rates. They're expected to raise their short-term rate between 0.25% and 0.5%. Most people are leaning more towards the 0.5% because they really have to do something to tamp down inflation right now. It is going wildly out of control. And if you missed last week's video where I explained in great detail all this stuff that's going on right now, what you can do about it, you can go back and check it out right here. But if you missed it, the PPI number, our producer price index, came in at 9.7% year over year. That means that compared to a year ago, the cost of goods to producers that make things that we end up buying on the shelves is 9.7% higher this year than it was last year. Now that's a big problem because that cost ends up getting passed down the line eventually to the store, and then of course the consumer that buys that thing and checks out at the register with it. So that means that we're probably in for a little bit more pain, unfortunately, on the inflation side, even though we already had a high inflation reading last month. Now, you may or may not have seen that ABC News kind of floated out this headline the other day about inflation looking towards 10% as a result of the Russia-Ukraine crisis. But that's not really the whole story because the things that are directly or indirectly connected to Russia-Ukraine aren't all packed into what's causing our inflation. So I think it's a little bit disingenuous if I give you my personal opinion and my professional one for Mortgage Heroes. I think that's a little bit disingenuous to say that because the PPI number of 9.7 is already really close to 10. We already had a high inflation number last month, and over the next 30, 60, 90 days, that PPI inflation number starts making its way into the marketplace where we end up buying our goods and services. So to lay that at the feet of the Russia-Ukraine crisis, I don't think that's a very genuine explanation, but I do think it's an attempt to try to get a shot across the bow to warn people, hey, we might be in for a little bit more pain ahead, brace yourselves. Now, I also don't want to say that and say the sky's falling and, panic in the streets. That's not the case either. Everyone calm down, it's fine. It's not going to be that way forever, I hope, but right now it looks like that's the way things are trending, and until they're not trending that way, they are. Same goes with rates. Right now with the Fed waiting for their March meeting and their March minutes to come out and their March rate decision, everyone's kind of just hanging around and waiting to see what they're gonna do, but the trend is definitely moving in an increasing rate environment direction. And until it stops moving in that direction, there's really nothing stopping it. We have to see some functional, fundamental, and technical things fall into place that would suggest that inflation is slowing, curbing, flattening. They're gonna use all these terms, so be open-eared about those things. When you start hearing those things, maybe those are hints that we're seeing the end of this inflationary pressure and that eventually maybe there's a relief on the other side of that. So this week, if you're looking to lock your loan, you should not expect a really big increase or decrease in the rate as a result of the Russia-Ukraine thing. I don't think that's where it's going to come from. It's really going to come from the technical and fundamental aspects of the economy and monetary policy if you see a drastic rate change at all this week. Otherwise, I think we're not going to see our next major move up or down until we get into that second week of March, and then we're really going to know where we stand with the Fed. As always, please feel free to share this video with people you know, like, and trust, and help them win in mortgage and real estate in 2022. Those of you who need help right now, please go ahead and leave a comment, send us a direct message, or contact your loan officer so we can help you win in 2022, whether that means you're buying your first place, you're buying an investment place, a multi-unit property, doing cash out for that dream remodel project, or saving for a rainy day, or down payment for buying that investment place. Whatever the reason may be, let us know how we can help you. We hope you have a great week, and we'll see you again next week.